GKFX Prime presents the Market Analysis Webinar.
Welcome traders, welcome everybody. You know what time it is. We have another week of market analysis, high probability trade opportunities for you. Shortlisted a few charts for this week for us to have a look at. As always, hope you had a good trading week last week and made use of what we looked at. Again, another week. We've got quite a few bits of news for this week on the calendar. Let's see where the rest of May brings us. We have something setting up, a few charts. So let's see what looks good for this week. Let's begin as always with the calendar, and then let's see where we go from there in terms of what we've got on the charts. Okay, right, let's begin. Here we have the calendar I've written out. So let's look at the week overall from Monday to Friday. On Monday we've got manufacturing index on the dollar. Tuesday from Australian monetary policy minutes, that could be a big one, so I'll put a little asterisk there to mark it out. On the pound we've got claimant count change. CAD we've got CPI, so that could be a bigger one for the week as well. On the dollar we've got core retail sales. From Europe we have a speech from the ECB and an employment change news there as well. Wednesday we have a GDP rate from Japan, wage index from Australia, and the Bank of England's speech on the pound there, and CPI numbers on the euro. Thursday, balance of trade on the yen, that could be one to watch out for. I have bank holidays in a few countries in Europe and in Switzerland as well. Just bear that in mind. On Thursday, employment change from Australia, annual budget from New Zealand. So those two could be ones to watch as well. On the dollar, unemployment claims, and the CAD we have a speech from Bank of Canada there, and ending the week with a speech from the Fed on the dollar. So watch that one too. You never know what's going to happen with these speeches. Okay, so let's begin. These are the bits of news that are marked out on the calendar. We do have the major ones. Tuesday could be one, CAD there. What have we got? We've got CPI. Wednesday, another speech from the pound here. So there are several yen bits of news. There are several CAD news, a few pound, and what else have we got? Some dollar news, but not the biggest ones, except for possibly the end of the week. Yeah, mixed bag there, and a few to watch out for. So let's have a look what we've got in terms of what's on the charts. Again, we're going to follow on from last week. We'll carry over some. I've added some others as well based on what the charts are showing. And let's get to it and see where we go from here. All right. I'm going to begin with the majors as always. Let's begin with the Aussie dollar, which is what I'm looking at. So Aussie dollar on the weekly, we have had a very long range here. Sideways market, not very clear. What we are anticipating overall is the fact that if you look at this bullish move up here, and if I take the fib, I can see that this was a very big impulsive move, and here we have a retracement, and now we have a range within the retracement, so we are hesitating here. This could possibly signal that we are coming to the end of this retracement and we're going to be possibly on the way back up. Now, what would signify a end of the retracement? Well, we do have key levels here, 61.8 and 78, which we usually look out for. So this kind of zone around here, which the market has not reached yet, which means to me, at least in terms of probability, that we have possibly more downside to go. Now, last week ended up very clearly bearish, very obvious to see this pin bar, so I would expect more bearishness to continue down to the bottom of the range and then possibly lower into this zone. So let's just move this zone a little bit so it's a bit clearer. Now, of course, we could go the other way. We could continue ranging, but at the moment, on the balance of probabilities, I would say we have a little bit more downside to come. And we may clear these equal lows here at 0.656. Now that I have got a more higher probability bias and look at the lower time frame, you can see last week pushed higher out of the range and then came right back down inside. So here we have this retracement happening at the beginning of the week. So what I'll be looking for is a price point to enter. So here we've got a price point, a significant price that would be a bit more expensive to sell from. So into this area and then down into the lows, which could be a nice risk to reward. If we breach this level up here, then this whole idea would be invalidated and we may be reaching for higher prices to possibly, who knows which high. We've got all these levels here, but I'll have to reassess then. At the moment, because of the bearishness, that is the idea at the moment, looking for this swing, ultimately, of course, to break these lows and then to come back down. And you know how it goes, the market will create a new or so to say continue on this little trend that has developed here. We broke this structural low, this structural low, this structural low. There's no reversal here, so I would expect to continue. So that will be the idea in terms of the balance of probabilities for this week on Aussie dollar. So looking for that reversal once we get this better price. Okay, so that's Aussie dollar. Let's have a look at dollar yen. So dollar yen, not one that we've looked at recently or in a while, but let's have a look at it now. So what do we see? Well, on the monthly time frame, we have this very clear bearishness breaking the structure of the market to the left here on this low. So we could be possibly heading lower, and you can see this is kind of in a way, a little bit of the reverse of the Aussie dollar. Of course, we are here going by the strength of the dollar. So strong dollar means weak Aussie dollar, and strong dollar in terms of dollar yen means more upside on dollar yen. And we can see after this push, you have this very slow kind of ranging movement. You can see on the weekly, it's a bit more clear, slowly petering up, coming up higher and higher. And on the monthly, we can see there has this gap. We have not retraced into this area, so this would be the area I'd be interested in to cover this area. If you want to draw a fib, you can draw a fib if that's your thing, just to see the trace more clearly. We haven't reached the 50 level, as you can see. So here's that 50 level. Let me just mark it here, and this line is the 61.8. Let me just delete this fib. So here we go. Those are two reference points. Go higher. Here's the weekly. Last week we ended up with a bullish pin bar. There was no reversal, so I would expect to continue higher to this high, and ultimately to the 50 level, which sits at, let's mark that price, 39.139. Oops. You go 1395, 1393. Yeah, about there. So that's the idea, to go into that level. Let's go look at the lower time frame. Here's our longer time frame level. Let's look at the lower time frame, and what can we see? Well, we can see the market has pushed higher, broken this structure, and now I'm looking at this level for the market to come into. Kind of the reverse of the Aussie dollar, isn't it? Yeah, sometimes the market can be in sync. So here's the first target level, and then obviously the 50 would be the preferred one, and then possibly ultimately to the 61.8, which is at 142.40 or 60. Yeah, something like that. Let's be a bit more conservative. Oops, say 142.50. And here's that idea. So a bounce, a continuation, and then These lows would be the low. Oops, that's the wrong. Didn't want that. These lows would be the invalidation point. Wouldn't be looking to reach beyond that, because if it does, we're breaking structures and then possibly continuing lower. That's the idea on dollar yen. Okay, so this swing and then higher. On the balance of probabilities, of course. Let's look at another yen pair. We've got CAD yen here. Similar kind of thing on the CAD yen, as you can see. We've had this retracement. Now we're coming back a bit higher. We have this bullish candle last week, broke the high of the week before. And once again, we have this reference point, kind of this zone, this area where price has not come back to. We moved away. So let's see if it does come back to that. On the weekly, last week was an inside bar of the week before that, which ended up closed higher, breaching these highs. So I would expect to see a bit higher prices. The last swing high will be the next target, and then we'll have these ones that we just marked out, which are 103 and here 104.4, something like that. So that's a decent 200 pips or so away. Let's look at the 4 hour. Once again, similar picture to the dollar yen. We've got this retracement. We now broke this high up here. So I am looking for higher prices. Now, what I'd like is either a push down and a higher price, or possibly a push higher, retracement into the level, which would be here now. And then once that happens, a move higher. So that's the anticipation I've got in terms of the CAD yen on the balance of probabilities, remembering that we do have dollar news for dollar yen, we have CAD news, and we have yen news as well. So we may line up with that, we may not. The market may completely reverse and collapse if the yen gets some strength. So let's see how it plays out in terms of whether this scenario happens and whether we do have the price action actually telling us that we are going higher still. I'm going to wait for that confirmation, and yeah, for the market to show its hand rather than do guesswork and say, oh, it's going here or there. Let's see where it actually shows that it's going, and then we'll make use of that opportunity. So those are the two yen-based pairs. So we've got Aussie dollar, dollar yen, CAD yen. Now let's look at some others. Let's look at euro pound. Now euro pound is one we've been watching for a couple of weeks as well. Here was our targets, as you could see, from a couple of weeks back and last week, and that's what we had. So marked out the zone which we went into, and then went further down right into the target. So the question now becomes, what do we do from here now that we've reached these targets? So let's just clear up everything. Let's get rid of all of this so that we can look at the charts cleanly. Well, what we've got is we have reached into this interesting zone, interesting area, and the overall much bigger monthly time frame shows bullishness on euro pound. So we've got this impulse move here. We have this very slow retracement, which is typical price action, typical of what when we're in the retracement, the market does not move swiftly swiftly away back and forth. As you can see, this is a swift movement, and here this is a very tricky back and forth in their retracement. Slow, tedious, and can be tricky to read. Now the question becomes, are we going to have this as a low and move higher, or move a little bit lower before looking at that reversal? At the moment it's hard to say, because we don't actually we can't actually see anything very clear on the weekly until we have next week close, if we close higher or not. Let's go down to the daily. On the daily, we could see that we have had a reversal pattern here. So bullish pin bar engulfed the previous two bars, and this reversal pattern here. Now, it's not quite clear that it is a reversal. For me, it will only be confirmed once we breach these highs. That will be, the probabilities will really turn in our favor then, if that happens. Now, with this highs being broken, if that is the case, the probabilities will increase, and therefore, looking at higher retracement back down into this level, reversal, and further price action back up to the highs. So we've got this next high, obvious highs, next obvious high, and then next obvious highs here, and then ultimately the high of this entire range retracement. So we've got quite a way to go. That is a long way for euro pound. 200 pips is 250 pips, if I'm not mistaken. It is a long way for euro pound, because euro pound moves slowly in terms of pip counts. That's the idea here, and I would look to see that move higher. I wouldn't look for this low to be broken. If we do go lower, then we just don't do anything at the moment. We just wait for the market to do its thing and create a reversal in its own way, whichever happens. We may have to wait another week for that to happen, and we just have to see that that is the case in front of us. Otherwise, yeah, the probabilities it's not worth it. The edge is not there. I want to stick with our edge. That's the case for euro pound. In terms of buying by idea, that's where the probabilities lie in my eyes at the moment. So once again, you don't have to agree with me. Put your comments down below. Click like if you like this video, and subscribe if you haven't already. But do share your comments below, and let's have a look at what you've got. If you've got something else in mind, and if you're seeing the market another way, I'm sharing with you my analysis here and where I see the week progressing. And obviously don't want to be trading everything all at the same time. The markets may chop and change, so situations may change, especially with the news that we're having this week. We have quite a few across the board, so we're gonna have to see how it plays out. Now let's move on to another pound pair. We've got pound New Zealand, which we looked at last week, and last week played out as expected. So we're looking at the bullish idea, and here's the idea right into our zone, and bang, we have had a move away on pound New Zealand. And what next? Well, obviously, as you may already guessed, here's the weekly. You could see that pin bar continuing to go higher, so I expect this low now to have been formed in terms of probabilities. Oops. So here's that low. Let's now get rid of that. And what next? Well, what next is the next levels higher. So I mark this level higher up here. That's the idea. And I would be expecting some kind of continuation of that. What does that look like? Well, quite obviously, here's a level here that we can go into if you want to draw the fib from the low to the high. Here's the 50 level, here's the 61.8. So any drop lower to get a better price, a lower price, a cheaper price would be the preferred idea, and then continuing higher. So quite simple now. Once we've had the shift, broke the structure to the left here, 1, 2, now we're having the retracement and then going higher. If that's not the case, if we don't get this lower price, this cheaper price, then this high, as you can see, we're kind of repeating the same things over and over again, right? But we're just exploiting our edge and planning based on what we see in the market and just doing the same thing, right? We want to be consistent. Break higher, as you can guess, pull back, get a better price down to the level, and then continuing on its way. Obviously, this is the preferred one because it's a cheaper price, higher risk to reward, but whatever the market gives, the market gives, okay? So, pound New Zealand, there we go. Back into these highs, we'll have the break of this high, back into this high, and then the ultimate high here. And we are around to 300 and 420 pips away. So decent. let's work with what we've got here. That's what I'm looking at on pound New Zealand. And let me just repeat again, if we have a break of this low, this is the ultimate invalidation point, and I would be scrapping this idea because we're just breaking lower and possibly continuing to the downside. You never know. We'll see what the market gives to us this week. Let's continue. We're going to look at S&P again. It's one that we've been tracking for a bit. Here's what we've got. Still got the markings from previous weeks. We've got this high, ultimate high to reach, and then into this gap that the market created, which I marked out before at 4222. And what's been happening? 2 weeks ago, we had this candle with left a wick. Week before that, left another wick into this area. Last week was bearish, but it was very slow. And we have not had any strong indications. Look at the daily. No strong indication that we are actually going lower. We are kind of stuck in this range, aren't we? What do we expect now? Well, now we still looking for bullishness because there is no price action reversal. The market is in a range, so overall you can see these wicks, rejections, whatever you want to call them, would indicate that there's more upside rather than downside. With that, the buying opportunity, the buying is the more favorable option in terms of probabilities. And what we're going to look at is look at a lower time frame. Here's the beginning of the week. We're now shifting higher. What would I look at? Well, I would look at a break of these structures during the week. Market to break higher, to pull back to a lower price within this zone, within this area. And then once again, continue to the highs. So we've got around about 4200 level as the reference point, and then ultimately 4222 up here in this gap. And there's also this high to be aware of. So yeah, looking at the upside here, as you can see, we are going higher right now. And first I want to see a break to confirm that we're not going lower. There we are actually reaching higher and wanting to go higher. And right now the market keeps trying to go lower, but it's not doing so. It's not really, giving opportunities for traders to you can see breaking the structure and go lower, but it is not going lower. It is just staying stuck in this range and continuing to stay here. So once it breaks higher, then we're breaking to the top side, then we are invalidating all these highs, and therefore the high probability is that we are going higher once we breach and break through. That's the S&P. Let's have a look on the daily. You can see that a little bit clearer. Here's this funny looking range, very messy price action, very tricky to trade, tricky to enter unless you are on a very, very low time frame. We've got this little possible swing. If we break that swing, then more likely that we are heading higher. That's the S&P. Finally, as always, we're going to end up with crypto and Bitcoin, something we'll be looking at for a while. We're still going to track it because we're going to keep an eye on it, stay focused with what we're watching, what we're planning, and seeing as the plan is looking like it's an interesting plan, I would stick with it. What do I mean by that? Well, this is what we're looking at. If you were with me last week or last few weeks, you've probably seen this already. You've seen this chart. You're kind of familiar with what I'm about to say. So sorry if I sound like a broken record and repeating myself, but this is how it's going to work. This is how it is. Sometimes we don't have the setup. We're going to have to be patient, and then wait to for the right moment to shoot. Last week ended up bearish. Weakness. We had this break of structure. You can see that clearly. This is what we planned out for. We had this break of this trend line, exactly what was planned. And as before, I was looking for these lower prices to be hit, and it kind of looks like we are edging towards that slowly. Let's delete these. This was the idea in case we were wrong about the market, so let me just delete that. still looking at this gap as the next target, and this one to be the target after that. If you want, I'll mark out the price points here. We've got 35,000 and we've got 39,800. Call it about 40,000, yeah. Much easier with the with these numbers. So it's just easier to read. There we go. Okay. Now we've got broken these structures low. We're going to the downside. So I'm looking now. The higher probability is that as I am looking for these levels to be hit, the probability becomes higher now that we are going to the downside. However, we're bearing in mind that we're trading against the trend. So two things we can do here. One is take the trade against the trend, or just wait for the lower price to come to us and then trade that. Or you could do both. Now, here's a gap reference. Here's another. And here is the first point of reference level that marked out. What we can see at the moment in terms of trading against the overall higher time frame trend is we can see these swings, swing low, and then this is a lower high, got lower low, and now we're creating a retracement. We may possibly be bouncing here, creating another swing, and then moving lower. So we've broken this low. See that? Broken lower. And possibly creating this swing low. If we get some decent price action, this could be a trade to the downside. If this high is broken, then I will no longer be looking at this short idea to the downside, but preferably, as I was saying in the previous weeks, because we have this ranging momentum, movement, the upside into this level and this lower level going back up to, this will be the obvious first target, but I marked this out before. This and this level will be the obvious next levels to watch out for. At the moment, it's not clear. So if you want the highest probability, don't look at this idea, look at these lows. If we reach there, at the moment, what we're looking at is this trade against the trend. Bear it in mind, because as I was showing you before in the previous charts, especially in the Euro pound, sometimes it gets very choppy and it's very tricky to navigate around a choppy market trading against the trend. It's a higher probability to be stopped out, and it's a little bit more unpredictable. Going by experience, you may have noticed that as well in your experience when you've been trying to do that. That's the idea here on Bitcoin. And what else is there to say here? Not much. This is the idea. We've got much clearer bearishness here now that we've got some indication, some more price action. When we were up here, it was unclear because it was very choppy. Yeah, the bias holds, the idea holds here, and if you're getting bored from watching the same charts or me go over similar charts, then, well, it is what it is. This is how trading works. We want to keep an eye out on the specific charts that have the higher probability rather than moving around. So again, these are also too many charts. These are all ideas. So pick the one that's right for you, that's high probability when the market comes to us, and always manage your risk. As I say here every week, it's a endless, constant reminder, because it is probably the most important thing when it comes to trading if you want to stay in the game. Okay, so my name is Dima. Thank you very much for watching. Have a good trading week. Watch out for that economic calendar. Keep an eye on it each day, and yeah, trade accordingly. All right, thanks for joining me. Hope that helps you, and you've got some good ideas here for trading opportunities. I'll speak with you soon, and bye for now. All right, guys, take care.